It is Money Monday here, and with both the Dow and S&P 500 reaching record highs this month, it's got a lot of people thinking about getting involved in the marketplace.
Yeah, and here to help us break it down with some basics and explain some investment terminology, please welcome back the co-founders and CEOs of Earn Your Leisure, Troy Millings and Rashad Bilal. First of all, if you're not in this world, it can be really kind of crazy for your brain. You guys, congratulations on all your success. You're hosting the 4th ever Invest Fest in August. Rashad, what should fans expect from this one?
Well, it's where culture and commerce meet, and it's a very unique experience. Over the course of the weekend, we'll probably have over 30,000 people that'll be there. And we have a vendor marketplace with 400 businesses. We have panels, fireside chats. We have 50 Cent is going to headline. He's talking about his business empire. But we also have workshops on AI, on home buying, on crypto, stocks. So everything when it comes to the world of finance, but a great networking opportunity and a great way to really, change your life, and not only meeting people, but gaining information as well.
Yeah, that sounds really interesting and important. And now, Troy, before we start investing here, let's define some basic fundamental terms. Key investing terms like stocks, dividends, market cap. What are they, and how do those elements interact?
Yeah, so a stock is a share in ownership in a company. I used to tell my kids when I was teaching, think of a company as a pizza pie, right? And every company is an individual pie, but if you want to have a slice of it, you have to have a share. And so each share has its own price. And so when you think about that, now each share adds up to a market capitalization, which is each share growing into the overall valuation of a company. So if a company has 10 million shares at $10, that company is now valued at 100 million. And so a dividend, think of it as a reward. So when you buy a company, every quarter they give money back to the shareholders based on reserves or profits. And if you think of how you're going to invest, look for companies that have large market caps. That means that they're doing well in revenue. That means their profits are growing, and they have operating cash flow.
I love how you just rolled off all this math like it's not a thing. Rashad, let's talk about in real estate, because everyone's like, oh, invest in real estate. You can't go wrong in real estate. But who can afford to buy lots of real estate? So there are these things called real estate investment trusts. How can you do that? What does that give you in return?
REIT, it allows you to invest in real estate without actually owning physical property. As you said, especially in New York City, $1 million is a one-bedroom apartment, right? So it's intimidating for people to buy real estate. But a REIT is a company that owns real estate, and you can actually invest portions of it. And it's kind of like buying a stock, right? So a company might own malls across America, right? And now you can buy into that company and you can sell. The benefits is that it's liquid, so you can sell quickly. You can invest with small amounts of money. You can invest with $100, $200, depending on how much the REIT is selling for. And there's different types of REITs. There's equity REITs and there's mortgage REITs. So mortgage REITs are mortgage-backed securities. Equity REITs are income-producing properties. So I like the hybrid model where invest in both, because they're both important aspects of real estate, but it definitely allows you to get real estate exposure without owning the property yourself.
Troy and Rashad, thank you so much
for
joining us here today. And be sure to check out InvestFest. It's August 23rd through the 25th at the Georgia Congress Conference Center.